Good morning. This is Larry Morgan from Archer Financial Services with some commentary on the financial markets. This morning, not very much is going on. We've been in something of a holding pattern for the last 2 days since Friday because we're facing three major events this week. They haven't happened yet, so the markets are waiting for them. The first major event is the Federal Open Market Committee meeting. That begins today. The decision is going to come out tomorrow afternoon at 2:15 p.m. Eastern Time. The second major event is the policy meeting of the European Central Bank. That'll be Thursday. And then the third major event will be the United States Employment Report on Friday morning, non-farm payroll, the unemployment rate, and so forth. The most important of these three events is going to be the European Central Bank. And that's unusual. Normally the Fed is more important. This week it's going to be the ECB, and I'll explain why I think so. The Fed is not expected to take any major policy positions. There's been a general feeling that they will at least hint at additional accommodative policy, maybe a third round of quantitative easing, QE3. But as of this morning, in a survey that Bloomberg took, 88% of Fed watchers think they won't actually make that decision today. They might hint at it, they might wave at it, but if they make that decision, it'll be at the next meeting in September. So probably nothing from them, but something still a little bit supportive for the Treasury market. As for the unemployment report on Friday and other economic reports, that's expected to be moderately positive, a gain in employment of 95,000 or 100,000. Probably keeping the unemployment rate at the same level, 8.2%, where it's been the last couple of months. Not very good, but not a disaster. All of that will just fit into the narrative that's underpinned the bond market and the equity market, for that matter, for the last couple of months, of a very slowly growing U.S. economy, a struggling European economy. This morning, the Eurozone reported a record unemployment rate of 11.2%. So those things will be, as I say, they'll fit into the narrative. Nothing much will have changed. But the ECB is a different matter. As you remember, last Thursday, the president of the ECB, Mario Draghi, gave a speech in which he made very, very strong assurances that the ECB would support the euro, not necessarily its price level, but support its existence and its safety. And then on Friday afternoon, some anonymous officials from the ECB laid out some of the specific policy measures that he was talking about. More purchases by the ECB of peripheral European government bonds, a reduction in European interest rates, and more long-term extensions of liquidity to banks. Since then, Draghi has been meeting with a lot of European officials, political officials and banking officials, to try to drum up support for this. If he's able to get sufficient support at the Thursday meeting, that will be a very, very substantial change or an extension in their policy. That's been supporting equity prices since Thursday and especially since Friday. It's been supporting the prices of Spanish, Italian, to some extent French government bonds. It's been supporting the euro itself, which seems to have found at least a temporary base at about 120.5. It's currently trading around 123. So all of that has been, to a degree, priced into the market. If they actually take any of those actions, those recent activities, those recent trends, will extend themselves. They'll be intensified. If they don't, if he's unable to get that support, then there'll be a great disappointment. That will hurt equity prices. It'll give another big bid to U.S. Treasuries and probably to bunds. But that is going to be the key event of the week. As I said before, these opinions are all mine. They're not the opinions of ADM Investor Services. They're not the opinions of Archer Financial Services. Thank you.